Welcome back to my channel. I'm your host Miss KK and this is The Wave, your weekly show on all things money. On this show we get to dissect topics related to personal, family and business finances, and as usual my hope is that by the time we get to the end of this series you are better equipped to make sound financial decisions. If you are new here, welcome and thank you very much for stopping by. Please consider clicking the subscription button below so that you can be notified every time we upload a new content. And if you are already a subscriber, thank you for your awesome support and interaction in the comment below. So today I'm going to be going a little bit off track what I wanted to speak about. I know in the previous episode I said we're going to get into financial goals, etc. But before we get into that, I thought I would address something very important, especially in the time of pandemic, which is insurance, and in particular life insurance. Yes, there are different types of insurance. There's short-term insurance, then you have your life insurance that covers you in different instances. And we know I'm going to be speaking specifically on life insurance, and then some other videos will do short-term insurance. So I want to give just a bit of background on what life insurance are, my personal experience when I took out a life cover at first, and how I ended up canceling that one and actually getting on a better product. So really, life covers are normally mandatory when you are getting a loan of some sort. Let's say you want to buy a house. At least that's how a lot of us take out life insurance. We don't necessarily just take out life insurance just for the sake of it. Most of us really just get to the life insurance part of it when we are actually forced to do so. So as for me personally, I was buying a house, and as part of that house I needed to take life insurance so that the bank can get a guarantee that should anything happen to me, they won't need to repossess the property and try and sell the property for them to recover their money. So essentially what the life cover did for the bank is that if I were to die today, they would take out that life cover from whoever my life cover provider is, then pay out the portion that I still owe to the bank, and then the remainder of the money would go to my beneficiary that I've nominated in terms of the life cover. But it really shouldn't start at when you are forced to take a life cover. You should actually be taking a life cover independently of when you are required to, because when you do it that way you get more clarity of what you want out of the life cover, and you also tend to shop around a bit, because if you are getting it as part of a home loan approval process, it's for example, you might be under pressure from the bank to get that process finalized before you can get your property, etc. So really, why do we need life covers? Yes, we need life covers so that our beneficiary or whoever we are leaving behind, especially the dependent that were on our account in terms of their cost of living and in terms of provision for education, etc., so that we can ensure that those people are taken care of in the absence of us passing away. And most of the time life cover will also include an element of funeral cover. So if you were to die today, yes, again your life cover is going to pay out your family a certain portion that can be dedicated towards covering your funeral expenses, and then the remainder will be paid out to beneficiary after any debt has been settled. So basically that's why we need a life cover, to protect those that we are leaving behind. So personally, I want to give my experience of how I ended up with an inflated life cover. So I was in the process of getting a home loan, I think 2-3 years ago, when I was buying a house, and the bank said I needed a life cover for the home loan to be approved. So the same person that was writing me a life cover referred me to some other broker that sells insurance, and that broker wrote me an insurance premium of 730 that would increase every year at 5%. And remember that life cover is not a saving. So if I were to cancel life cover after I've contributed for 10 years, I walk away with nothing. The insurance company is not going to give you your money back simply because you cancel the contract. It's a risk policy, it's not a saving. So if you cancel, you lose everything. So I got this premium that was really high, and it was going to increase until it was going to increase for 5% every year until my death, basically. So that meant that I was looking at a premium that's going to escalate quite quickly before it becomes unaffordable for me. So luckily for me, I mentioned it to my brother at a time that I got this life cover and I'm paying this much, and my brother was so shocked that I was paying 700 and something. I was under the age of 25. I didn't have any child. My loan was literally under 500,000. and he that was older, his premium was even lower than mine. So my brothers told me, your premium is very high and it's just a matter of time before you get married, then you get kids, and then inflation catch up and you can't afford that premium anymore. And as I mentioned earlier, life cover is a risk-based policy, it's not a saving. So if I decide to cancel 5 years down the line, I would have lost out on that high premium because the insurer is not going to refund me my money. So then I went back to the broker to tell the broker, listen, this premium is very high, I can't afford it, can we please lower the premium? The broker was just ditching me, avoiding me, and eventually I called my brother back and said, what can I do? And my brother said, you just need to go to your broker, to your insurance provider, whoever the contract is with. So a hypothetical example, say my insurance is with Metropolitan or it's with Old Mutual. So write a letter to them and tell them you can no longer afford to pay this insurance contract, then they will cancel it. But before I did that, because I know my insurance is linked to my home loan, which was a prerequisite for me to get before I buy a house, I had to take out another contract that will come in effect, that will come into force immediately after the old contract is cancelled. So I looked for another broker, independent. I told the broker, please look at my contract. What is making my premium so high? And the new broker looked at it and found out that there was actually a portion of terminal illness that was in my contract that I was paying a whole 300 per month for. That was the reason why my premium is so high, because that is almost like a short-term insurance, because the insurer is covering you in an event something happens to you and you can no longer continue able to work and making the money that you're going to be working. Obviously that is more likely to happen in the near future than a death, so it's likely to cost you more than an overall life cover. So because of that small component, and I think the benefit attached to that was a little bit inflated, and my premium ended up being high. So with a new broker, we went over the contract. We didn't take that out completely, we reduced it, and I think there was also some excessive funeral cover that was in there. We reduced that as well, and at the end of the day I was able to reduce that premium from 700 to 500. It still continued to increase with inflation, but at least I'm starting from a lower base than a higher base. So when do you need to start? So now for you, when do you need to go out for a life cover? I'd say as soon as you start working and as soon as you start having dependent on your as soon as you start having dependent that you think you need to protect, then you should take out a life cover. Obviously, you must be mindful of the requirement of the life cover. When you take out a life cover, you need to undergo medical tests. They normally test HIV, test sugar levels, test blood pressure, and I don't know what other tests they do. Some insurance company would tell you if you fail A, B, and C of the medical test, we won't give you this life cover. Some insurance will tell you if you fail A, B, and C, we will give it to you, but we'll give it to a higher premium. So you also just need to know which company would take people of a particular health status versus to which life cover will take people without a particular health status. So basically that's what I wanted to say. And practically why I'm bringing this up in the midst of the pandemic is because I'm seeing a lot of young parents passing away, leaving young families behind, and God knows whether those parents had life covers for their dependent, and you still need to be able to take care of those people. Yes, you must also take in mind that just because of the pandemic and you see, there's a risk of your parents passing on, don't now go and think I'm going to take life cover for my uncle because my uncle is in the hospital. Because number one, your uncle will probably fail that medical test because they are already sick in the hospital. But in an event that they pass the medical test and then you get them on the contract, there's still a sort of for a lot of policies, there's still a window period that if the risk event, in this case death, happens within an X number of period, they can still deny your claim. So I'm just putting out the information there so to think for yourself, what is a life cover? Who needs to take out a life cover? When do you need to take out a life cover, and what you need to take out a life cover for. And most importantly, I'm not a financial advisor, but when you talk about this, when you want to talk about these things, it's very important that you inform yourself about these things before you go to a broker, because you must understand that brokers are normally commission paid people, so it's in the interest of them to write out policies and to sell products. So they might not necessarily advise you in the best interest. Like for me, my first broker could have said, look, you are still young, you don't need this much, you don't have kids, you can up your premium later. Because the reason why my premium was increasing is not because I have like 3 million payout when I die. It's because of a certain clause that was in my contract that I needed to pay attention to the fine print in order for me to be able to see it. But obviously life cover is also not static. You need to update it as your lifestyle changes. Obviously, when I took out my life cover at that time, I was under 25. I didn't have parents. I didn't have kids. I wasn't married. So now that I'm married, I need to go and revise my beneficiary list. I need to also see if this is adequate for my kids in an event I have kids, and if this will still be in line with my policy. In addition, most of the policy allow you to take out a cover for future debt. So one of the things that the first advisor advised me, which I think was really good, was future debt. So the advisor said, I'm going to include a portion, let's say 500,000, such that if you were to get another debt in future, you don't need to undergo medical test anymore. You don't need to undergo this process anymore for you to get that new debt. So like I've mentioned, I don't have a car. So if I want to go get a car with a bank today and that car is 500,000, that means I can still use future cover debt that's on my existing policy to buy that car. So but if you don't have that component in your life cover, then every time you buy something on credit, you are forced to evaluate and take out another cover. And remember that your life cover is also dependent on the factors that are present at the time of the cover. So it could be that when I was 25, my cholesterol levels were low, my diabetes, I wasn't diabetic, my blood pressure was low, and because I'm under the age of 25, I'm considered less likely to die than if I were to take out this life cover when I'm 40. When I'm 40, I probably would have gone through the stresses of life and high blood pressure, and I'm also closer to dying than a 25-year-old. That means at that time, any life cover that I want to take out is going to cost me a lot more. So you need to look at all of this in context and contextualizing your circumstances and see, am I fine without a life cover? If yes, then continue living your life. Should I perhaps consider taking out a life cover? If so, yes. Can I speak to someone before going to a broker? Or if I'm going to go to a broker, can I at least go to someone that's reputable and that has been referred by a friend perhaps? And lastly, if I have a life cover, is it still sufficient for the beneficiaries that I'm leaving behind? This is all I want you to think about from this episode. We are going to be talking about other insurance, like short-term insurance, and how to go about it, but I thought I could bring this up. And as always, thank you so much for tuning by. Please don't forget to subscribe, and please sanitize and keep safe. Thank you very much.